Hey there traders, it's been a long weekend, hope you had a good one, and we're back at it with the Bears keeping their full control in the short term. We'll go over what we're looking for a bounce to take place. I'm honestly not really focused on the weekly time frames at this point. Once our daily bounce gets going, then I'm going to focus on the weekly chart a little bit more significantly. Put out a video over the weekend about trader flows and habits and routines. That's on our YouTube, and let's get into it. So today was marked by aggressive bulls being rewarded first thing at the open and patient bears being rewarded later in the morning. So first thing this morning, we had QQQ break its low of yesterday. And I've been focused on QQQ more than SPY, which is normally not the case. But in this instance, I'm more interested in the individual names that are more correlated to QQQ than to SPY. So I'm just staring at QQQ all day these days and not SPY. So SPY dropped down. The low of Friday was 334.87. We broke that by $1 first thing, then into a bounce. The bounce was fairly significant, over 1%. And after that, we could see a lack of follow through. To get back this much, we say, uh-oh, that's a red flag. If that's as much as we're going to bounce on the hourly time frame, these bears are going to keep complete control. Remember, for the daily bounce to get underway and to be looking for follow through, step number one is an hourly trend change. And step number two is breaking the high of the previous day. Oftentimes that happens at the same point in time. Not always, but hourly higher low and higher high. So we started the morning breaking the low of Friday, and then on that bounce, we knew it was just looking for an hourly lower high, and it set that hourly lower high fairly quickly. So anything under 337.74 is an hourly lower high from here. The next support level is down at 332.01. And then again, we're in an area with a lack of support. There's a gap to fill after that at 330.06. What I would like to see tomorrow is a gap down open, because I would be looking to be a buyer on that gap down. 4-hour RSI would be pretty beat up for the first time on SPY in a long time. The last time it was oversold, we had a nice V-shaped recovery. So watching for a potential gap down open for me to be aggressive as a bull. I didn't really do a whole lot today. I had some long exposure in a couple individual names, and then ended up adding a QQQ short again as a bit of a hedge against those longer positions. And other than that, I didn't really see a whole lot that I liked, so I sat on my hands a lot today, but I'm looking to be more aggressive tomorrow if I were to get the gap down open that I'm looking for. Because again, what I like to do is enter on an oversold bounce, ideally scaling in a couple orders, and then seeing the bounce play out, obviously, to a certain degree, to allow myself to take half profit and put a stop below my low. And that's going to be my game plan on trying to get this bounce, because let's just use SPY as an example. I'm not going to trade SPY for the bounce, but if I did, let's say we gap down to 330 and I'm making an initial entry, and let's say I'm willing to fill 3 orders, but only 2 fill, and I have an average at 330. We then bounce up to 333. I sell half. I can put my stop at 327 for break even and hope that I just nailed the start of the daily bounce. And if I don't, I lose nothing. And if I do, I have a big win. So again, ideally we want to be positioning ourselves in low risk, high reward scenarios, and that's the way that I do it. So that's what I'm going to be watching for tomorrow. I'm watching some individual names. OSTK is one name, Tesla is another name. Some of those high flyers that have now pulled back massively. And when we see this kind of volatility in both directions, we start to look for equilibriums. So SPY bears still in complete control. IWM, low of Friday broke again. Not a whole lot of bear follow through under that break. There's a gap to fill at 1. We already filled that. So we're now looking down at 144.67 as the most clear support level from there. Weekly consolidation, still no major red flags. It's just no longer likely a bull flag, but it is still a weekly uptrend at this point. What I would need to see to be convinced that our monthly lower high has been set, similar to what we were watching on oil, which we'll look at, but I do expect a monthly lower high compared to 170.56. And with the weekly higher low, the last one that we saw down at really the last clear level is 133.28. I would expect that level to hold initially. And if we're going to see a setup for a monthly lower high to be set, it would be a weekly higher low being set, failing to break the recent high, and then confirming a weekly downtrend to give us a monthly lower high, and then depending on how much pullback we get, potentially a monthly equilibrium. But that's all bigger picture, one step at a time. Hourly downtrend is our guide, and it's nice and clear. Anything under 152.48 is just an hourly lower high. So QQQ has all my attention, and again, we broke the low of Friday first thing, very little follow through, straight into a significant 3% bounce, and then that slow fade with the hourly lower high being set. So I would say anything under 278.22 is just an hourly lower high. We closed at the low of the day, increasing bear volume. That's another thing. We never saw any notable bull volume to tell us that our bottom had been set. And that's something I'm going to be watching for on the bounce as well. And on climax bottoms, we see the all-out flush and then a V-shaped recovery, and then you have really high volume in that period. It's the maximum amount, the last of the bears, and then all bulls from there. And that's what I'm going to be watching for. So gap down open, quick flush, V-shaped bounce. That's the kind of play that I like. And we'll see if we get that set up tomorrow morning pre-market. If we see a higher open tomorrow morning, then that's not going to be the setup. Maybe there'll be a bottom fishing play off of the low of today, like some names had this morning. All depends on how we open. So hourly downtrend is our guide on QQQ. 264.63 is the next major support level. And as far as the weekly chart is concerned, weekly exponential support is now in play. And that's something to be watching as well. And on a name like Tesla, we're in an area with a lack of previous price levels of support. We just went straight up and now straight down because we didn't establish a whole lot of support. I am watching this weekly 12 period as a potential visual guide to be watching for that bounce. XLV, significant bear follow through. There's a support at 103.72, and then we actually broke that, so there's a gap now, 103.46. Weekly time frame, again, still in an uptrend, still no major red flags on the weekly consolidation, but it's a notable pullback. And once these daily bounces do get going, bears are going to be waiting to reload. Bears will be looking for daily lower highs for another entry once we see a temporary bottom being set. And that's the case for almost all individual names. So again, that's why you have to answer the questions. Are you bullish or bearish? Are you aggressive or conservative? Are you looking short-term, mid-term, or long-term? Because if I am conservative and I am bearish, and if I'm not in a position right now, I am waiting for a daily lower high and just being very patient for that. If I'm being an aggressive bull, thinking short-term, I'm watching for that bounce play, and I'm making a couple attempts with low risk to try and see that bounce. One more example of that scenario would be Tesla. Let's say I wanted to be an aggressive bull today, scaling into Tesla weakness as we got to some extreme levels. Let's say I had an average at 345. We bounce up to 368. Let's say I take half that position at 360. My then break even is 330. I can put my stop under the low of the day, and I would have got stopped out right at the close. But again, I lose nothing, and my reward potential is significant. Healthcare, nope. Financial sector, we lost the daily uptrend, which is notable. And on the weekly time frame, most important support is 24.23. If that level is lost, we lose the weekly higher lows. So we're not seeing rotation. The rotation that we had been seeing before this notable pullback was any little step back the tech sector takes, the financial sector goes up. And that's showing money going from here over to here. And when everything's dropping like this the last couple of days, money is leaving the market. It's not just going from one place to the other place like a game of musical chairs. It's leaving, and it's going into the dollar. The dollar is bouncing. Biotech sector, daily inside bar. Any individual name that held its low of Friday stands out a bit stronger than any individual name that did not. And XBI is one of those names, so it's a tightening hourly range. Low of Friday's dump, high of the bounce, higher low, lower high, and we're looking for a higher low compared to 102.16. So if I want to be a conservative bull, I'm looking for a name like this. Amazon's a daily inside bar. Netflix is a daily inside bar. Why? Because they have clear support levels that I can play off of. And I can limit my risk, and I can know exactly what that risk is, as opposed to a name like Tesla. Let's say we gap down open. It's free fall to a certain degree, and you got to be real aggressive to want to play that bounce, and you got to have some conviction, because there is no clear support level nearby, and you have to have a lot of experience playing oversold bounces as well. SMH, week closing at the low, weekly consolidation significantly underway, and again, easy uptrend at this point. Tons of space for the higher low to form. I'd say anything above 145.85 is a weekly higher low. So no major red flags on the longer term uptrends at this point. The VIX was weak today, and I looked at the VIX per request at the end of the day today, and I was pretty surprised at where it was trading. Down weak near the low of the day. And SPY closed pretty much at the low of the day. So what does that tell us? Well, we had the VIX lead this move with a bull break and a slow, steady move up until the market rolled over. Are we now seeing the other direction where we're seeing, some hedges locking in their gains, some hedge positions, and now looking to buy the market dip? That's a possibility. Let's see if it's going to be a clue. It's a daily inside bar. If we break 30-50 bearish, tons of space for a daily higher low to form. But again, notable, I'd be expecting to close up near 34 as opposed to down near 31 with how the broader market closed today. So that stands out. Dollar has broken the daily lower highs. When's the last time that happened? Back in June. It has been 4 months. So the daily trend has not changed. Remember, to change the trend, we need a clear higher low and higher high. So that's something the bulls are still looking for. But the weekly bounce is underway. The weekly RSI has cooled off from oversold, and we're looking for a weekly lower high, anything under 97.80. And we have weekly exponential resistance as a short-term visual guide to be watching as well. How this bounce plays out is going to be very telling. Is it a bear flag bounce that favors bearish continuation? If you are a bull in metals, crypto, and stocks, you want to see a bear flag on this weekly time frame. You want to see an inability to confirm a daily uptrend with a clear higher low and higher high. If you are short this market, you want to see this bounce significant enough to be looking for a weekly higher low to form once it tops out. So you need that daily trend change to see that kind of follow through. Keep your eye on the dollar. It's giving us clues. The dollar bounce started before this broader market dump started. And the day that the dollar bounce started and crypto pulled back and the metals pulled back, I remember looking at stocks in the market video and saying, I'm surprised stocks are still holding up this well. And then it was a day or two later where that was obviously no longer the case. The hedge I took on QQQ, I forgot to mention that. So I've been in and out of hedges. Exited half of my hedge end of Thursday. Exited the other half of my hedge at 272 on Friday. I had a really good exit there. And then re-entered that half hedge on this move here. Again, knowing, bigger picture, knowing the most likely scenario is an hourly lower high. So what am I doing? I'm being patient and waiting for a bearish entry on a QQQ hourly lower high to protect any long exposure I have in my account. When I saw this size pullback, I say, uh-oh, that's too much of a pullback. We're losing momentum. Lower high, and I entered bearish when we broke this support. We then putted around and really didn't do much, but then by the end of the day, that hedge ended up protecting some position. So I am still swinging that, and I will exit it when I look to play a bounce, but again, just overnight protection if we do see a gap down open. So the dollar bouncing, gold. I entered gold pre-market this morning, GLD, at 180, and my stop was 178, and we're now trading at 181.50, so a little bit of green there. Why did I make that entry? Just a bottom fishing play off of support. If we stay in the daily equilibrium, if we hold 1900, my risk is small and my reward, if this equilibrium breaks bullish, is large. So at that point in time, we were about, maybe $10 above support. And now we're $30 above support. Anything under 1993 is just a daily lower high. It's possible, with only 3 more trading days this week because of the holiday, it is possible we stay in this tightening range into next week yet again. I said that last week, but forgot about the shortened week this week. Green day tomorrow, and we'll be watching for the potential to remain in this tightening range. We do need a bit more follow through. We need a 4-hour trend change for the bulls to be confident that this daily higher low is set. Silver broke its short-term support of $26, but no bear follow through. I'm not really concerned with the silver chart, but I would say 26 is a key level. As long as we keep closing above it, bulls keep that control. Miners broke daily support, but again, no bear follow through. We broke support by 30 cents, trying to bounce. And I just like the gold equilibrium is so much more crystal clear. No little breaks with fake outs. It's just standard and tightening. And GDX, if we get bounce follow through, we're looking for a lower high compared to 43.13, still in this tightening range. Oil has fallen off a cliff. How's that for a rising wedge bear break? Remember our monthly lower high, our exponential resistance as a visual guide? In a video I said if this was a 5-minute time frame, that's where I look to short, or a 15-minute time frame. And it just happened on the monthly time frame. Unfortunately, too distracted, too much going on, too many positions to get into oil bearish, but that's all right. Congrats to anybody that did. And we lost the weekly uptrend, we lost the daily uptrend, our monthly lower high has been set, and now big picture, we're looking for a monthly higher low compared to 23.26 sometime over the next few months. Next time we bounce on the daily, certainly looking for a daily lower high, and I would expect oil's bounce to coincide with the broader market bounce once we get it. And everybody's going to be looking for daily lower highs. Again, pull up not any, but most of our major names, even the names that held the low Friday, just looking for daily lower highs next time we bounce, which is why bears will be patiently waiting for those daily lower highs. Let's say Apple breaks its daily inside bar bullish, even though it closed weak today. I make a bearish entry at 129. I put my stop at 138 over the all-time high and hope for follow-through. We'll cross that bridge when we reach it, but we will be looking for bearish daily lower highs once the daily bounce starts. I'm looking bullish in the short term. I'm looking bearish a few days after that. Natural gas. Daily downtrend confirmed. Lower high, lower low. So still healthy weekly consolidation. Odds of a weekly bull flag decrease a bit, but tons of space for a weekly higher low to form. 4-hour oversold conditions. So let's see if we get a bounce from those 4-hour oversold conditions. And next time we bounce on the daily, anything under 253.2 is just a lower high. Bears in control of the short term. Bulls in control of the midterm. So that's where we stand. Again, establish your game plan and have clear stop levels. It's fine to be aggressive as long as you acknowledge I am being aggressive. The last thing I want to do is not make that acknowledgement, and the next thing I know, I'm scaled in with half of my account on a Tesla free fall oversold bounce attempt. I can say to myself, I can mentally prepare that morning and say, okay, I'm going aggressive, and I know I'm going to be risking this much, and I know I'm going to place my buy orders here, and if we don't bounce, I will lose this much money. And that's a plan. Whereas the first scenario, it's not a plan, and next thing you know, you look and you're down way more than you thought you would be, and you're in a full position, and you are completely out of control of the trade. When you have a clear level nearby that you are playing off of, or something nearby that you're playing off of, you are in control of that trade. And that's why I love those sell half quickly in short-term profit trades, because as soon as I do that, I am very comfortable and in the driver's seat. Yes, I take off the possibility for half of my reward on the way up, but my risk is just diminished so significantly. That's how I sleep at night. So, give me a gap down. Give me a fat gap down. The bigger, the better. The more extreme, the better. Gap down, flush it for 5 minutes, V-shaped new high of the day. We'll see what we get. We'll check back in tomorrow. Have a good rest of your day and do good things.